Hello, and thank you for being here. If you're new here, welcome or welcome back. Today I wanted to go over the stock market, and some of the stocks as we've seen has been taking a good run. So stocks like SMCI, and then you have NVIDIA, you have a lot of stocks out here that are performing like AppGo, then we have LRCX. So we have I wanted to also discuss how we've noticed with the trends. So right now some of the stocks like NVIDIA is in an uptrend, so we wanted to have bought NVIDIA before its uptrend, because right now, because it's in an uptrend and it comes down, you can lose your option if you go and purchase NVIDIA because it's already trending up. And I'll go over it in a chart to show you. You have to be very careful when purchasing options. I will be coming out with an ebook on this, and I will have consultation calls that you can make with me to go over your personal portfolio, and I will have a fee attached to that for consultation. So but at first, I wanted to mention to you that I am gonna go over the charts today and show you where like for example, I've purchased NVIDIA 2 days ago, and I'm up right now in profits, and I'm not gonna be selling. I have a stop loss set. I will show you how you can purchase an option, and the trading platform that I use. Yes, I will go through some more stocks to show you, for example, indicators that could be used and all of that. But my personal indicators, I will be putting that in the ebook, the stocks today, and looking at the trending of the stock, and maybe I'll give some levels or so out, and maybe we can take a look at like other stocks like CARVANA, and I can give you some feedback into that, and just so you can have the knowledge to help you if you're looking to go long in CARVANA, for example, or you're looking to go like weekly or whatever. But I don't advise to buy weeklies, because weeklies can cause your portfolio or your option to lose its value really fast, because if you don't buy within a certain time frame, the weekly actually can eat out at your money. So because something called Theta, so Theta comes and takes away so much percentage from your option. So if you're having like $200 in a weekly, Theta is like $20 a day the closer you get to the date of expiry. So you don't want to play weeklies. I don't encourage weeklies, because weeklies can be risky, extremely risky. Has indicators here, and this is where you can select your chart. So here is where you can select your chart, and you can go down on this and select, for example, NVIDIA. You can select NVIDIA, and when we look at NVIDIA here, you can see that it is on an uptrend. When you look at it, just taking a look, let's remove all of these. So when looking at NVIDIA, you can see all of this uptrend with NVIDIA. And when you look at the chart itself, let's go year to date and look at it closely. And we can see that here It started January 2024. So if we go back a little bit, we'll see it's taken a bigger picture, zooming out to see a bigger picture. We can see here the chart was going up in November and it came down. So it's been on a constant, run from here. But last year, there was a dip in a lot of stocks. So let's see here. Let's go first. It came down October, November, and then it started going up. It started going up in November. So as we could see here, NVIDIA went up from 385 and it went on a climb from November right here, and it keeps going. It had another dip, 486.57. So you could see from October it was 404 then, and then it kept going up. So right now it is looking great. I just drew some levels here. Not to worry about that, so I can remove it. What did I do? Reset chart view. Okay, so when we take a look at this, we can see that the chart is on an uptrend here. And if we look at, let's say, at 30 minutes, we can see that those levels that I drew is here from the daily time frame. But we can see here that it dropped from 768 all the way down to 672. That happened on the 22nd of February, all the way down here. But then it kept going and it kept going, and all the good news, and it kept going. So right now, when we take a look at it, you could see that it's actually on an uptrend. So let's look at an indicator, one of the many indicators that is out here that you can look at. So let's look at the RSI. There's so many indicators. So looking at the relative strength index. So right here, you can see here that the stock went up. Usually you have on the RSI, it goes all the way 70. When it goes all the way 70, 80, that means the stock is overvalued. And when it comes all the way down here, like it did here, it's undervalued. So this is at the area where a lot of traders get into the stock and make, higher gains from when it goes up to the top. So if you look here, this reflects this one here where it dropped all the way and then it trended across until a little bit more on the downside. And this dip that it had here is where a lot of buying pressure, as you could see, took place, where the stock went all the way up from how much? 664 all the way up to 764, so 100 points. And NVIDIA is known for making big moves when it moves. So it's a very liquid stock, and it has been on a move since. And now with the price target being $1,000, it has been going and nonstop, as you could see here. This is the TradingView platform I'm looking at, and TradingView is showing it today. When it closed at 926.69, and then you could see here in the post market that it had how many points? 39.69. Yeah, so it went up. So it went up to all the way to 938. I don't know, it's not showing here right now, but that's how much it had in post market this afternoon. So a little earlier. So that is NVIDIA. So you want to buy when, for example, the RSI is on the bottom here, when the stock is down on the bottom. And you want to always sell when the stock is to the top of the band, for example, using this indicator. So in this case, you would have a profit from the bottom here to the top. This is where you will want to sell. You always want to sell if you have a short-term option, or you can have longer term options. They have option that goes out for, a year, 2 years, 6 months, 12 months. So, it depends on how much you want to risk. So it all depends on your strategies and how much you want to risk. So honestly though, I don't recommend long calls, just because when the stock takes a dip, you could be facing a loss. So 6 months to 9 months would be the best thing to do. Best way to get liquid if you're looking to make money is 6 months to 9 months instead of the 1 year, 2 years, and all of that. But yeah, this stock, if you had held this stock just in a matter of how many months, say it was all the way on the bottom here. This is just February, and we're at March, and look how high it's gone from all the way from 667 to now it's 926. So that's a big profit. And how much percent? And anyways, when, if the stock comes down, it could come down one level down here. It depends on the news. Again, it depends on the news. It can come all the way down. But right now, it's looking bullish. So it's on a bullish trend. I can see it's on a bullish trend here. So just looking at it overall. And yeah, this RSI, you don't have to worry with the RSI because it's not always in the same real time. It's a little slow. So when in the real life market, I don't follow the RSI, but this is just for example purposes. And if you want to take another look at another strategy you could use, there's many strategies. You have the Bollinger Bands. The Bollinger Bands is showing you right here. See, Bollinger Bands +2, it's showing you here. And then it's telling you this +2 is like it's going up. And then -2, it's coming down. So it's showing you like the selling pressure. So it goes again here, +2, and it's going up. And then here it shows you the arrow that comes down. So that's that strategy. Let's try a few of the strategies, the indicators. Let's try a few of the strategies, the indicators. So let's see here. Session volume, you have the Ikimoku cloud. You have that cloud. It shows you when it's getting red. versus when it's getting green and it's MACD. They have the order block finder. There's so many different indicators that you can use whenever you're trading. But I believe in just a few that I've been using, and I find the ones that I'm using is way better. I don't know. It's just works for me. It works for me, and it helps me to be able to find the trend. And I mean, it's been very great for me overall. And a few of my clients that I have been using the same system, and it's really been a big bonus to them. So yeah, let's go to another chart. For example, SMCI. When we look at SMCI, SMCI is actually, it was consolidating. We can see right here. If we look at the 30-minute, also, let's look at the 30-minute chart. Oh my goodness. Let's look at the 30-minute chart. You could see SMCI is going up. Here it was consolidating. Here, through here. And this is where it was for how many? 2 days? 6th. Went up a little bit to today. So we can see indicators, they have the all the way to today. So with it being here, I can tell that it's bullish and it's going to keep going up. And as we know, it has good news on SMCI. It's being added to the S&P. So just that alone, along with, just looking at the indicators that I use, I can tell that it's going to go now. I'm looking at it and it looks bullish. So it's going to go up. So that's one thing I could tell you. 84 level. And if it comes down, it'll be a 75 at the last time it was tested. It'll be 74 here. But if it comes down. But other than that, if you buy calls, it's bullish looking. So it'll go all the way to 84. That's where we're looking at right now. And yeah, let's go to, I wanted to also go to the options chart to show you, for example, here is SMCI 1190. It came down to 1190. It was 1194 when I checked. And let's let's just look at CVNA, CARVANA. And look at the aftermarket. You can see it's 79.52. So it's going up. It's also going up here. But in purchasing an option, you want to, let's say, go to whichever brokerage you're on and go to the stock. You look up the symbol where I did, right here in the symbol. And I did CVNA in this area here. And then it pulled it up for me. So this is the option for CARVANA. And if you look at this, it has the dates right here. This is this week. So you definitely don't want to play this week calls because tomorrow is already Friday, the 8th. So anything on this date will definitely go to zero because Theta is eating up the options. Theta is not your friend, not for short-term calls. So if you look at it right here, These are all red. These are calls, and these are all at negative. You have a negative, a negative, a negative. So yeah, these are all negative. A few of them are positive because probably these people holding this before, way before. So they had them at a lower price. But you want to buy into a call. Let's just say here is where you select the calls, and on the top here, top right here, you have the dates. You have the 8th of March, which is tomorrow, which you don't want to buy. And then you have the 15th of March, the 22nd of March, weekly. So weekly options. So I selected the 15th of March, and let's say you decide to play a weekly. Let's just say you decide to play a weekly because you want to pay less money, because usually the closer the weeklies, sometimes they're cheaper than the farther the weeklies out. So I was saying the level of 84, so let's say that'll be your strike price. So looking at the strike right on the top here, this is how you know it's strike right here. So if you look on the very top here, it tells you the various different things like the theta that I was mentioning, the gamma, the delta. I like to look at the theta and the delta. So the theta tells you how much per day is taken out of the option, how much money is taken out of your price that you paid for the option. And the delta tells you how close you are to making the strike price. So look at this delta here. We could see 70%, you know, at the strike price. You're 70% winning at the strike price. And of course you are winning because look at the strike price is 75 and this is 79. So yes, that is a big plus because that person is at, let's see here, a 17%, 17.50% on winning at this strike price, right? So this is in the money call. This is what's called, this part that's highlighted is in the money calls, and this part that's not highlighted is out the money calls. So this left side is all calls, and this whole right side is puts. So it's right here on the top, it says calls, and on the right here it says puts. So when you purchase in a call, and it's, let's say you purchase an in the money call, you would have to then select the strike price. Here at the strike price, you will select the amount. So let's go select, for example, that, and you see where it tells you right there. It tells you right there that you selected that. And then it says positions on the right here. This is Webull, so every platform is different. And then you have positions and you have orders. And this is telling me I don't use Webull, so actually I just have a user account. But I plan on starting to use Webull. But yeah, it has to unlock to view the orders. I haven't ordered anything, but this will pull it up, and this is how much it looks like, $4, but this is 4.40 times 100 shares because one option is 100 shares. Okay, so it'll be 440 times 100. So that's how much you're going to be paying for this price, this stock price at 79. In the money is 440 and 450. So bid ask that's where you'll be paying in between there. Okay, so I like to buy out the money because it's cheaper. It's in the money is more, so I like to buy out the money. So because I called 84, if you look at 84, it's way cheaper than it is in the money here. So at 84, at this date, next Friday, would put you at 0.53 right here at the bid, right? So you have the ask and you have the bid. So it will definitely be this price times 100 shares. So it'll be 200, not $2, but 200. Because remember, an option is the right to sell is 100 shares. One contract is equal to 100 shares at any time. Okay, so yeah, it's definitely cheap, but let's go to a further strike date. So let's say we're playing March 22nd, it'll be more money because the longer the time expiry for this for the option, the more money it costs. So let's look, that was 200 something, and if you look here, it's 400 something. But at least you stand a better chance at being safer at Theta not getting you when you buy a further out call. So look at the Theta here. It's 0.19, right? 0.198. And the delta is you're at a 0.42. So I know the delta, might seem a little off, but it's not as bad as a delta, let's say at 16. It's like saying this stock is going to go to 100. So yeah, this is probably not going to happen. So, the delta is lesser. So when your delta is way less, it's because it's not a likelihood that the stock will go to that, amount. And if you look on the top here, it says implied volatility. This is how much more volatile it will be, 102% at this strike price versus the strike price of 84. The volatility is a little less, but it's still high. So all those are things you need to look at. But I was discussing the Theta. Look at the Theta on this. So as the time come closer, this is how much will be coming out slowly from your amount on your money that you paid for the option. So 19 versus on the 8th of March. Let's look back at the 8th of March at the strike price 84. And you'll see here the Theta is 42. Look how much more will be coming out. 42 points, 0.42. So it's higher. So that's why when you play the weekly, your option can literally go to zero and you will lose all your money because time could be against you. In case the stock dip, time could be against you. So the more money comes out, the more quick your money goes to zero. So that is why it's best to play a week or like 2 weeks out, not a week out, but 2 weeks out. And, even let's say you don't have the $400 and you want to go with the 100 strike price. Given the fact that we're at 79 right now, the price of the stock is at 79, right? And you go to buy $100. I mean, you buy the strike price for 100. You'll be paying cheap. Right here it says 119. So that's a 1.19 times 100 shares. So that'll be $119. Okay, to buy an option on Carvana. But you have time. And this 100. So looking at my results, you can see that SPY is at in the money call that I made yesterday that I sold today. And yeah, I just go ahead and I went ahead and I sold that and took my profits just because I don't want to wait until next week because I don't like playing weeklies. And I was just trying my trend, and yeah, here is the result of my trend. And then we'll see, I also had a long SPY which I also went ahead and sold today at a profit. So my next one is chart I'm going to show with a profit is NVIDIA, and I bought that also yesterday, and I'm up at, you can see, 900, which will then change to 1,000. And the last I looked at it today, it was at 1,400. So that's before the market closed. It was at 1,400. So this was a little earlier in the afternoon where it was 1,000. So yeah, here we go. And tomorrow it's going to be way more up. So please like and subscribe for more videos like this. Thanks for watching. Have a wonderful day.